Welcome to this video where I'm going to walk you through the different types of account available on Vanguard's UK investing website. So there's basically four different account types. The first is the personal pension. This will really apply to anyone who either is self-employed and will want to set up their own self-invested personal pension, or perhaps you don't actually have a pension in your current workplace, and again, you might want to set up your own separate pension to contribute to. The second type of account is the stocks and shares ISA. ISA standing for individual savings account. This is effectively a tax efficient way to invest. So you can contribute up to £20,000 per tax year, running from around the start of April right through to the end of March every year. And that's the annual maximum amount that you're able to contribute per person. So obviously, if you are a couple, a married couple, you and your spouse can each individually contribute up to 20,000 per tax year, and everything inside that stocks and shares ISA is tax advantage or tax efficient, if you like. So any capital gains in terms of your profits that you make, and any dividends that you collect, or distributions from by way of income from funds that you're invested into, will also be tax free or tax efficient. The third type of account is the junior ISA. This is again similar to the stocks and shares ISA, but as the name on the tin kind of suggests, it's for children, your own children. So you can contribute up to £9,000 into the junior ISA per tax year per child. So again, if you've got a number of children, it's £9,000 per tax year per child. And this can actually, you can obviously contribute by yourself in terms of you as parents, or you can also get friends and family to contribute to this junior ISA as perhaps a gift, a birthday present, or a Christmas gift, so that you're effectively investing into their future, so that whenever the child comes to perhaps use the money, the investment at a later date, maybe when they turn 18, that money will have grown over that time, depending on obviously how long you've been invested in, and what you've been invested in. But again, they can then take advantage of that money that's been invested, perhaps throughout their child life, their lifespan. And the fourth account is a general account. And this is effectively just like the other accounts, except doesn't really have any tax advantages, or doesn't have limitations, if you like. It's effectively just a standard investing account that you can contribute money to, and then invest. So this is usually generally used once you've kind of maxed out all the available tax efficient methods of investing. So maybe you've already maximized your £20,000 stocks and shares ISA allowance, and if you have children, you might have already maximized their annual allowance. And so this is probably just another type of account then that you can contribute money to, and invest, separate to those other accounts that I've previously mentioned. In terms of Vanguard themselves, then this is quite a helpful little 6-point kind of list of why to actually invest with them. One of the things that I like is the low account fee. So the overall management fee, or account fee when you open an account, is 0.15% of the amount that you have invested. So if you have 100,000 invested, let's do that really quick. 100,000 times 0.15%, then that's £150 in terms of the fee that you'll be charged just for having an account with Vanguard. There's also then separate fees that are wrapped up inside each fund that you then actually invest in. So it's 0.15% account fee plus whatever the fund charges in terms of the management for that. So just be aware that there's almost like a twofold approach in terms of the fees. Flexible in that you can choose a ready-made portfolio or build your own. So Vanguard has a number of different funds that you can choose to simply just invest into them, and they'll spread that money out into a variety of kind of ready-made funds. Or you can kind of go your own way and build your own portfolio in terms of selecting the different funds that you might want to invest in. If you're a complete beginner, probably best to go down the route of investing into a ready-made portfolio. Something like their life strategy funds are probably worth looking into. You're in control. Obviously, you can take your money out whenever you need it. You can start small, so you can either put in a £500 lump sum, or set up monthly contributions of £100 per month, as it's stated here. You can access the website and your own account any time and anywhere. However, worth noting, they don't have a mobile app, so the only way that you're going to be able to view your accounts and your investments is through the website, the vanguardinvestor.co.uk website. You can obviously do that via your mobile phone, but just worth noting that there is no mobile app, so everything has to be done via the website, which I actually think is a good thing, because if you're investing for the very long term, which you should be, if you are investing, um, you don't really need to be logging into your accounts and looking at your investments on a daily, weekly, or even monthly basis. Just a few times per year, just to check up on things, perhaps you know increase the amount that you're investing and so on. There's no real need to be opening your account if there was a mobile app on a daily basis. And then finally, no hidden charges. So again, like I mentioned earlier, there's the kind of twofold approach to fees, by way of the account fee, and then the fund management kind of expense fee. But there's no charge to switch holdings, to deal, or make payments or exit, like there sometimes are with other kind of big providers, or just financial institutions in general. So hopefully this is a good, quick, concise breakdown of the different account types and why you might choose to invest with Vanguard.